welcome to the Mortgage Rate Weekly Market Update for the week of January 21st, 2019. Hello, I'm John Thomas with Prime Residential Mortgage here to give you an update. Well, happy Martin Luther King Jr. Day. Today we celebrate the life of Martin Luther King Jr. and everything he's accomplished. So we'd just like to say, I hope you have a wonderful day today. If we jump into the market, mortgage rates did move higher last week. Take a look at the bond chart on the screen. You can see mortgage bonds hit their highs back on January 3rd. That was the lowest interest rates we've seen since 2017. But since then, you can see the downward trend in mortgage bonds. Bonds have been selling off, moving mortgage interest rates higher. Last week, we were hoping that floor of support held, but it did not. We broke through it on Thursday, and then on Friday, we reaffirmed it. It closed below it. We dropped all the way back down to the next floor of support at the 25-day moving average, closed right on that. That may not hold. If the stock market continues to improve, you're going to see bonds break below that 25-day moving average, and you've got a pretty good run down to the next floor of support at 101.3402. So with that in mind, with the trend for mortgage bonds to sell off, mortgage interest rates move higher, we're going to recommend locking in your mortgage interest rate to start the week to take advantage of whatever rate you have right now. Now, if we dig into the economic news, we saw that we are in day 31 of the government shutdown on Monday the 21st. So what is a government shutdown? Basically, in the normal U.S. budget process, each year Congress has to have a funding appropriation by September 30th. If that does not happen and they don't get a budget passed, then what they do is they do a funding resolution and basically keeps Congress open, keeps the government running as the budget keeps going. The funding appropriations are done in short-term increments so it can hopefully work out a budget to fund the government till next September 30th. So the last appropriations ran out. We have not had a budget passed. So the government shutdown started on December 21st, and it'll be 31 days on January 21st. So December 21st to January 21st is 31 days on the government shutdown, basically until Congress and the President can agree and pass a funding appropriation bill. The government will be shut down. That means non-essential services are not being operated. Non-essential employees are not reporting to work. Now, essential employees are reporting to work, but they're not being paid. So typically, when the budget does finally get passed, those furloughed employees or the people working without pay, they get paid retroactive back during all the days during the government shutdown. That doesn't help now while they're not getting paid, so it's going on long enough. People are going to be struggling to make their mortgage payment and their rent payments. So hopefully something will happen soon. Now, the funny thing is Congress members and the President all get paid during a government shutdown. So no one else gets paid, but I guess they're deemed essential and they must be essentially paid. So it would take an act of Congress to change the U.S. Constitution and change how they're paid so that if there is a government shutdown, they don't get paid at all. I think that would be a good bill to pass. Now, if we dig into some other economic news, we saw the Producer Price Index, or PPI, for December 2019 decreased by 0.2%. Now, the PPI measures wholesale inflation. So we saw consumer inflation was tame. Now we're seeing wholesale inflation and tame. That's good news long term for bonds. So we'll have to see if that trend continues. Then we saw the January 2019 Empire Manufacturing Index. It fell to 3.9 from 11.5 in December, well below the expectations of 12.2. So that means it's the lowest reading in over a year, and forecasts read that firms surveyed were less optimistic about the 6-month outlook than they were last month. So this measures the health of the manufacturing sector in the New York area. So that's not good for manufacturing, so that could be a sign that we could see the economy starting to slow. So we'll keep an eye on that. Then we saw weak initial jobless claims were released on Thursday, and they dropped 3,000 claims to 213,000 claims for the week. This will also be the sample week used in the Bureau of Labor Statistics January jobs report for 2019, which will be released on February 1st. So that is pointing to a very good jobs report with those low numbers. Now, there's other things that go into it, but based off weak initial jobless claims, we would expect a very good jobs report, so we'll keep an eye on that. Now, in the housing news, we saw the National Association of Home Builders Housing Market Index for January 2019. It rose 2 points to 58, above the 56 expected. So that's great news. Home builders are very optimistic about new home construction. So the NAHB Housing Market Index, a gauge of home builders' opinion on the relative level of current and future family home sales. Now, a reading above 50 indicates a favorable outlook. A reading below 50 indicates a negative outlook. So it's been favorable for a while, and it just jumped up. They're feeling even better about new home construction and new home sales. Now, if we look at the local news, we've got the next first-time homebuyer seminar this Wednesday, January 23rd from 6 to 8 p.m. in Wilmington, Delaware at Independence Mall eXp Realty office. And then we're back in Newark on Saturday, February 16th at the Christiana Hilton Hotel from 10 a.m. to noon in Newark, Delaware. You can register for either one of those events by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyersseminar.com. And then we're back in Maryland on Saturday, February 23rd at Hyattsville, Maryland from 10 a.m. to noon. You can register for that event, 410-412-3319 or online, marylandhomebuyerseminars.com. Look forward to seeing you guys next week.